Ladies and gentlemen, welcome to another episode of the Midday Market Madness. And I truly mean it. I mean, honestly, this is starting to get unbelievable. NASDAQ down another 0.8%, but the S&P as well down about 0.76%. That would have been a lot worse. This is sort of essentially pointing to more broad-based selling than just purely tech names. But the tech names are still selling off as well. It's starting to get a very, very scary for some people's portfolios, including my own. All right. That's one thing that, if I could highlight, there's been a lot of money lost across all of the sort of community that's investing in high beta names, tech stocks, these sort of things, and that we're all just trying to hold through this together. So I myself, I'm holding, not looking to trim any positions. Is there a potential that this is a little overcooked, potentially? Maybe. But that's where, the comebacks can be found, right? Hello. How's everybody doing? Lisa, Tom, keep us calm, he says. Keep us calm. 50% sell-off, I know. You know what's crazy? SoFi, like I was looking at this one. We're still... Maybe we might break above. There has been a little bit of a nice turnaround today, but still down 3.7%, still below $20 per share. I'm curious, like, how people saw the earnings and everything like this and then ends up selling it off. But I mean, obviously it gets caught up in the rest of, the broader sell-off. Now, unlike the other previous days where I thought that this was mainly driven purely by speculation of Claude Code and now a ChatGPT Frontier, which is essentially their version of this, creating AI agents that are, people will then end up sort of managing a fleet of AI agents that will go out and do complex tasks for you, which is what Jensen said 5 years ago and no one believed him. And now we're seeing those products actually be released. That can end up bringing markets down. But what really is the real scary statistics that we ended up seeing today was the Challenger January jobs cuts that ended up coming in at about 108.5 thousand job cuts, the highest January layoff that we've seen since 2009. Okay. And the new hires that were planned were only sitting at 5,300. That's an unbelievable Challenger report that we ended up seeing. Then Jolts also came in, new job openings, big miss at 6.5 million versus 7.25 million expected. So actual macro data that we're expecting to see, not good. Okay. Now I know people are worried about Warsh coming in. I think people are looking too much on his hawkish sentiment. And I think that the Fed is going to do what they always do, or at least should always do, is that, we actually look at the macro here and see what is needed. And if there are massive layoffs and job cuts are coming in and new job hirings are not, well, rate cuts need to come down, right? So I am surprised by the SoFi price action, considering how much this actually points to potential more rate cuts. Now, for a name like SoFi, let me put a caveat on that. It does not mean that rate cuts equal good and no rate cuts equal bad, right? There's a little bit of a, caveat in there where the job losses that lead to rate cuts also affect whether or not people end up paying back their loans. Those job losses could be tech employees that are being replaced due to artificial intelligence. And those tech employees have personal loans or debt consolidation or student loans that are currently sitting outstanding with SoFi, right? Now, the overall amount of originations outstanding versus how much SoFi actually holds in the broader, scheme of things is still very, very small. And they do tend to be higher FICO, higher average income jobs. But maybe that's where the layoffs and everything is more based around, or at least that's the concern, right? That it's actually not blue collar workers and factory workers that are looking to be replaced today. It's actually potentially the IT staff and the people who might be able to just, their work is being accelerated faster than they could, handle. So maybe we're actually seeing a little bit of a white collar job sell off rather than a blue collar, which is maybe what people are more used to. which is quite interesting. Tanner, help us. Dude, I'm not, there's nothing I can do. What I can point you to, I think there's a couple things that I've just been keeping an eye on that have kept me calm. One, I feel like I have an iron stomach for this stuff to begin with. So while it's sinking, I mean, of course, you have all those, like I spoke about this yesterday, those doubts and everything like this of like, hey, why didn't I just wait a little bit longer to buy those dips? I would have been at lower prices. I would have been able to buy more shares, lower my cost basis, and have more shares. I doubly messed up, you know? But in the next breath, we don't know that it's going to continue to shrink, or at least I don't. I'm not following the market in that sort of regard. And what I like to do is find companies that I think are AI resistant or even going to benefit largely from artificial intelligence. And I think Joseph Carlson put it well here. I just want to get this straight. Big tech companies, which with the smartest leaders in the world and the smartest employees in the world, with billions of daily users across dozens of platforms, have all decided to build out godlike supercomputing powers. And that makes you bearish? So the old Batman quote, right? Morgan, why can't I keep thinking of Morgan Wallen. What the heck am I doing? The Batman guy. Please, someone help. But yeah, regardless, I think, how are you getting bearish on that? How are people honestly selling off Google after these earnings? Because capital expenditures are rising? How about you look at it from a different angle? How about they are realizing and feel more confident that their spend is actually going to turn into revenues going forward, that they feel more confident that the SaaS names, which they mentioned multiple times, Morgan Freeman, thank you, that they mentioned multiple times that, you know, the leading SaaS companies are coming in and actually integrating Gemini into their servers. They are becoming AI native businesses, or at least trying to integrate with artificial intelligence. You know? Yeah, the capex is madness. This is a race to the bottom. What, that are you saying the opposite of what I'm saying, that the capex is overspending? Because personally, that's just not how I see it. I could be wrong. I'm no oracle, but I'll show you one thing. If we take a look, and I'm going to have to drop the chat for a sec, we can take a look at this on a quarterly basis. This is quite the ramp, okay, on Google Cloud. So capital expenditures is the purchase of property and equipment, and in this case, for data centers, it's purchasing the land shell and the GPUs or the XPUs that actually go into creating the data centers that are creating this Google Cloud external revenue, right? Let alone what they're building for themselves. Okay. So we ended up seeing a large bump up, 48% year over year on growth. And this is not a cyclical business, right? This is something that we end up seeing just over time. More and more customers end up coming onto the platform. Well, are they losing money on this? Well, it's not what we end up seeing. We can look to Google Cloud operating income growing even faster at 153%. Now, this chart doesn't look great because it went from negatives into a positive, so they can't show a rate of change. But what we can do is I built a custom metric here on Fiscal AI and made an operating margin. So not only are they increasing the amount of revenue that they've ever seen at faster and faster rates, now at 48% year over year, who could have ever have thought that? But also they're making more and more profit on that revenue, now at 30+%. And I don't mean more revenue or more profit on a dollar amount. I mean as a percentage amount on scaling growth. Okay. Let's go ahead and look to this in the charts here. I'll go here. So I just put this together really quick. And Azure's a little bit weird in the reporting. So we'll just look to where they started reporting right here. For the longest time, you know, Azure has been one of the fastest growing cloud names. Now, the biggest name is AWS, which is actually at the bottom. And they're expected, there's been a lot of channel checks from analysts that are pointing to actually roughly between 22 to 23% growth coming in this quarter. Now, if we see something above that, we've known that they've blown it away. It's so hard for them to grow at 25 plus percentages whenever you're putting up just so like such large numbers. If I go to just hide this data really quick and take a look at Google Cloud, which obviously is growing, but they just put up $17.6 billion. And then I look at AWS, they're doing 33 billion. Okay. So it's a lot to continue to grow at that rate. So that said, however, the large growth, even at 15 billion to 17 billion, that's a lot quarter over quarter of high margin business. So I want to go back really quick. Let's go back to Google, which is selling off on these earnings that we're talking about right here. The initial thing was not SaaS is killing us. It wasn't jobs are killing us. It's not the Schiller PE of the S&P 500 is at 40 plus times or something like this. That has not been the narrative. The narrative was software is dying because AI is coming in to replace those jobs. And that the local IT department for even Microsoft, like all these companies are just going to end up building their own SaaS businesses that, Intuit is going to essentially do this stuff for their own customers. PayPal's going to do it for their own customers. They're not going to go to Salesforce. Of course they are. But anyway, let's go ahead and take a look here. The original thesis was Google search was dying because of ChatGPT. This ended up getting erased as well. We're ending up seeing some of the highest growth rates, 6.7%, because they're getting better, just like what Meta ended up showing, that they can target better and then they can convert on those ads better because of artificial intelligence. And now use that across all businesses. They're going to see great step changes in artificial intelligence, to help them with logistics and packaging and all of these things for Walmart and Costco, and like to understand the large swaths of data that they've been collecting for essentially decades. Artificial intelligence is going to go through that like butter, like a hot knife through a big stick of data butter. They're going to have a field day with it. And what you're seeing in these numbers is exactly what's going to be displayed across the market. And at the end of the day, we're investing for a return on our capital. So I think a lot of people point to the macro a little bit too often. And what I think you need to be focused on more is, our company is going to be more profitable? Our margin's going to continue to increase? And the answer is yes, across all of the United States. Now, I'm not saying that there aren't going to be software companies that do get replaced. I'm not saying that PayPal is going to increase their margins so much that that company has to come back. I mean, there's loser execution and there will be losers. Okay. But let's go back. I'm just going to adjust this data back to March of 2025. And I'm going to scroll all the way down to revenue backlog and revenue backlog per percentage. So this is what they're hoping for into the future. You can believe whether it's true or not, but I'm going to essentially just show for you guys what I think is going to happen into the future for Google. Okay. And they're seeing this across all of big tech, Microsoft, Oracle. And by the way, Oracle, I think, is taking so many risks that I wouldn't even play that one, but you don't need to. You can play in these names like Google, which I'll show you here in a second, are capturing all the upside and limiting their downside by so much. We'll talk about that in a second. But essentially, back in March of 2025, they ended up showing off a revenue backlog of 27%, which is much faster than the growth that they were putting up before on Google Cloud. Okay, so that looked great as it was. Then into June, as the sort of pickup in artificial intelligence and some of these new products ended up coming out, started to show some inklings of a large spike up, 37%. And the market could wrap their head around that because, it is increasing, but they've done growth bigger than that. So, we might be returning to a space of high growth. And then the market, whenever they start to see things that just don't make sense, it starts to just break. And then they start to believe that the numbers aren't real. I had someone tell me yesterday in my comment section that NVIDIA's numbers are not real because it's circular financing. Okay. Guys, they paid, CoreWeave $2 billion and people think, okay, well, they're going to take that $2 billion and go buy chips from NVIDIA. No, they're actually looking to make $150 to $200 billion order over the next 5 years for NVIDIA. For $2 billion that they also see common equity in CoreWeave for, right? These are amazing deals for NVIDIA. NVIDIA has a venture arm, but they're also capturing long-term customers. Let's go ahead. So I don't believe in the circular financing. I believe in what these numbers of long-standing 30+ year businesses, that they are not putting up fugazi numbers that could potentially lead them in legal hot water. Okay, they're not all conspiring together to say, hey, let's mess over retail. Take the tinfoil hat off and just take a look. September, this is where the numbers start to break. Now we end up putting up growth of revenue backlog, $157 billion, up 81.6%. Things are starting to look a little stupid, and the market questioned these numbers. Do you think, Google said, hey, you know what, the fugazi numbers that we just put up, we're going to have to tone that down a little bit and actually just give a realistic number next quarter? Sundar said, F that. $242 billion of revenue backlog, up 160% year over year. And the company is down 3% on this news. The company is down 3% on this news because what they see is that revenue backlog is skyrocketing. But in order to pay for this revenue, in order to fulfill customer orders, they need to go and buy inventory. But the inventory in this case is, large warehouses, clean data centers of computers that are generating tokens at 10 billion tokens per minute. Okay. And so they need to set up more. They need more power to go through these. All the, crazy conspiracies that they end up using a ton of water and all this stuff, it's all being debunked. Okay. So the fact that there's people saying that this is going to get cracked down by lobbyists and environmentalists and everything like this, like, they're just being proven wrong. And it's just one, sort of large issue after another. You know what Nebius actually just came out and said? That their 1.2 gigawatt data center is using the same amount of annual water as the average United States restaurant. So like, you're looking at like a Walmart, or probably even smaller than that, like some small business restaurant that's feeding the same amount of water into a Nebius 1.2. That's like a 60 to 65 billion, maybe even $70 billion data center. Yeah, dude, that's another. Parsifal's so right. I always like whenever people go circular financing. I'm like, that's what the economy is, guys. Microsoft offers products to Salesforce. Salesforce offers a CRM to Microsoft. Like, money goes in circles because I solve your problems and you solve mine. And then people go, nah. Now they're doing it too well these days. Money likes to move. Economies like when money moves. It's whenever the money starts slowing down, then we have a problem. Sam Altman will sabotage the mainframe of Gemini. He will throw water on the mainframe or something. This is the downfall of Google. Okay. But yeah, so of course, there's going to be a lot of pessimism and disbelief. You can believe in Tom Lee's story at, whenever the company is at $60+, whenever it's sub $20, the whole belief of what he has to say or something like this is completely eroded. I think that's what's happening here too, is that although NVIDIA and Google and Microsoft and Amazon, the strongest businesses in the world, are putting up great numbers, people just, they don't want any part. They don't want any part. They don't believe in it. The system's rigged. It's against retail. It's all the common sayings that are recurring. And so then people end up selling out because they say, hey, this is going to zero. I missed a piece to the puzzle. And so, I was used as exit liquidity. We need to get out. I'm going to focus on real estate or some other asset class. Right. That's always what happens. And then, like, Bulls will make money in this market. Bears will make money in this market. Pigs will get slaughtered. Please do not be that pig. But yeah, this is not a rigged game. No one even knows that you own these stocks. Okay, no one knows that you own a Bitcoin at 65,000 or something like this. Which, in my opinion, I don't know how low this goes. I thought that there was some technical. Like, I even saw this bounce. I was like, okay, this is actually probably going to be the lowest that it's going to go. It's still falling. But I thought that there was some technical chart on Bitcoin that has worked since the beginning, where it has not fallen past its previous like large peak of the last 4-year cycle. I'm pretty sure that last cycle was around 65,000. Was that not like somewhere around here? Maybe this candlestick or something at 64,700. I'm pretty sure that has worked historically a couple times. I'm not a TA guy, as you guys can see. The number's 56,000. Well, that sucks. Well, that sucks more. Does Bitcoin know it's not supposed to be falling anymore? That's funny. That's a good, that's a good reply. People believe Michael Burry over the best CEOs in the world. Dude, the Michael Burry stuff, like, are we all just, getting into to GME? I'm not even following this name. GME is the place to be. Is down is up and up is down. It's like, for me, that's not the way I have historically invested. I'm going to stick to what I know. I'm going to be buying into companies that I think are strong companies that will survive long times. I'm like losing my ability to even form sentences right now. Sam Altman just said ChatGPT 5.3 Codex is here. Best coding performance. Mid-task steerability and live updates during tasks. Faster, less than half the tokens of 5.2 Codex for same tasks. 25% faster per token. Sweet. Yep. Sell off more stocks. More coding agents. Introducing Claude Opus 4.6. Claude just came out. Our smartest model just got an update. Opus 4.6 plans more carefully, sustains agentic tasks for longer, operates reliably in massive code bases, and catches its own mistakes. It's also our first Opus class model with 1 million token context in beta. Wow, take a look here. This is ChatGPT's full competition here. Here, wait, let me actually back this up really quick. So remember, this was posted just a little bit before ChatGPT 5.3. So they actually, I think, just posted up even better numbers than this. So I think they actually beat Opus 4.6, but we'll have to take a look. Agentic coding is slightly better on Opus 4.5. Agentic computer use, 72.7%. Agentic tool use, 91.9%. Yep, the updates come in, which means the fears of the market continue, right? And the models are only going to get better. But let's see how that actually compares to ChatGPT, right? Because Sam literally just wrote about it. 76% terminal bench, 64% OS world. All right. Wait, Sam Altman just said something else about it. Here, let's check. I love building with this model. It feels more like a step forward than the benchmark suggests. You can also choose pragmatic or friendly for its personality. People have strong preferences one way or the other. Yeah. Okay, let's go ahead and see the market some more. Is this changing anything? Mag 7 names. Meta is the only thing that's green in the Mag 7s. Amazon down 4%. See, actually, I don't think that this is all that crazy. What? Okay. All right. Got your text. Amazon is down 4%. I actually think that this is, if you're wanting to sell off these types of names, I think Amazon's going to do great. Okay. But why wait until after the quarter to sell this name if you know for a fact they're going to increase capex? If that's what's selling everything off, why are you waiting? It just doesn't make any sense to me. So, yeah. Okay, let me make sure that I get this done. Okay, Microsoft down 3%, Google down 2.2%, Tesla fell below 400 again. Not even space, data centers in space with robots that have Grok models that are tied to them are saving this market. Absolutely nuts. Absolutely nuts. Okay, Tevis, I just flipped you what you wanted. Okay. Amazon is going to kill it. I know they will. But that, like, Google literally just put up the best numbers that they've ever seen. They went down. Okay. It's insane. It's still 400. Wait, you just mean holding it up, or the fact that it's not like 600 or something? What exactly do you mean? Amazon will go down 10%. Well, I think a little bit of this is like the selling beforehand, I actually think that might help the numbers. I think some people, like, once the trend starts, they just, this is the hot hand fallacy. We're in a little bit of like a seller's market fallacy, if you want to say something like this. Like, because markets just continuously sell off big tech and software names in general, that's what's just going to happen into forever. I personally, I just have a hard time believing this. Nvidia's flat, but at one point they were at 171 today on the fact that Google just more than 100%, like more than doubled their capex for the next year. They're essentially saying they have a similar plan to, what do you call it? OpenAI, where they're going to spend $1.4, $1.5 trillion over the next 5 years if they just continue at this pace of potentially, compounding capex at around 50%. They just did 100%. I'm like, that would actually be, decelerating growth. Everyone laughed at Mark Zuckerberg whenever he said, hey, you know what? We're going to spend somewhere around $600 billion. And everyone was like, what? That doesn't even, you can't even model that. It would look insane. What are you even talking about? And then you see the revenue backlogs and everything like this. And you're like, okay, well, actually, maybe you can model it. Meta, they're only one company. And they even increased the 600 billion. I think Mark Zuckerberg afterwards, even after it catched all that flack, he was like, honestly, on our bull case, it's probably about 800 billion. I wouldn't be looking into leaps and all stuff like that. I wouldn't, make a super big stink about, or I would just be careful I wouldn't look to load up on more and more margin. Any interest in ARM? I mean, there might be some interest in ARM, but I do not think that this is the market where you want to look for new ideas. Okay. The reason is that the names that I know extremely well, I know their risks, I know what they're good at, are the names that are selling off. I don't need to look that far. You know, silver potentially coming back, maybe. Can we get above 70 again? 69.76. At one point today, hit 65.51 on silver. Rigetti's down. FG Nexus. IonQ, D-Wave. These are the names that you would think should have been the initial companies that are selling off, because they don't have, like, they have just insane levels of losses and no revenue. And they could be something big, but at least you could question whether or not that's going to be the thing into the future. Are we questioning Meta here? Are we honestly questioning Meta here? I wish I had more money. We all do, my friend. The thing is that the more money doesn't change the position, because you would have similar weightings in the companies that you like. Just thinking about this, like if you had let's say $100,000 portfolio versus a $10 million portfolio, you'd probably have a very similar portfolio than you do today, except that position sizing would be much, much larger in all of those names. What I'm trying to say is you'd run out of cash, you know, at the same sort of time as you've previously have. Do you believe, or do you follow any cybersecurity companies? Very rarely. If I were to buy a cybersecurity name here, I would buy CrowdStrike, though. I want to buy absolute leaders in this type of space. You buy the leaders here. Okay. Rubric. Yeah, I mean, I like Rubric as well, but I like CrowdStrike for sure. Are you looking at buying anything or holding out and seeing if red continues over the month? Well, I think at the rate in which we're dropping down on tech, that like this can't keep up at this rate. The discounts that we're going to be able to see are going to be a little bit too juicy. However, does this end up bleeding into a more broad-based sell-off? Potentially, but I'm not actually seeing it in the earnings. And that's my only concern, is like, you know, are people sort of deciding the future before any real evidence just yet? You know? Of course there can be signs like Robinhood, for example. If crypto's going down, then yeah, I mean, we can most likely put 1 and 2 together that their crypto revenue is going to fall. If the tech and equity names are falling, there's most likely going to be less options volume in this type of market. Like they could be hurt on a financial side. I don't know if you could say the same thing about even a ServiceNow or you know, an SAP or something like this. I think the pain just started. Yeah, I mean, if that's the case, then you know that's going to suck. But that's not really what I'm believing. But that's also why I'm not looking to get into leaps or anything like this. I'll play it a little bit safer, because if I get the timing wrong, then it comes down to how long I can actually hold on to these names. SoFi, for example, we're under $20 a share. What do I know about SoFi, and you know, how does this go wrong? Well, essentially, if we end up seeing a lot of job losses, this is like worst case scenario. If we end up seeing a lot of job losses that targets their user base, then potentially those people don't pay their loans back, and then it ends up showing up in their earnings. But with their extreme conservative guidance and the fact that um, I don't think that we've seen anything concrete in the jobs market or anything like this. I think people are coming to decisions too quickly right now, or coming to like an outcome too quickly right now, that they will most likely do very well and have great books of fixed income products that actually a lot of institutions would love to have right here. And they could probably even benefit off of, some of this weakness in the tech space. Yeah, come to conclusions. Thank you so much. Tanner Sports down so much that they took his internet down. Did you guys lose me? It says I've got a good connection. Amazon mass layoffs contributing to the job numbers. Yeah, UPS, a lot of transportation. A lot of transportation stuff. And that seemingly is only going to get worse if full self-driving continues to pick up. We're going to see big changes in the markets. It also leads to a lot of opportunity potentially. Okay. The community portfolio, you don't even want to see the community portfolio. It's probably getting decimated. Okay. Rubric, Dave, everything is down, man. Chime down 3.9%. But luckily, this bull market was so unbelievably big that like we're still mostly green on all of these names. Amazon 220 is definitely starting to get there at this point. Chime $20.87. Figma is getting like, oh my gosh, man. Figma, $10.7 billion company now. Look at this. 1 year chart down 75%. Year to date, guys, it's February 5th. Year to date, they're down 43%. It's crazy. They're probably the biggest loser out of this entire space. Does Adobe come back and be like, hey, you want to do that deal again? Maybe they'd actually let that deal go through, considering that the whole market believes that AI is going to take over. I mean, that's what allowed Google to keep Google Chrome, right? Is the fact that ChatGPT actually came in. Yeah, Altria, Coca-Cola, those names are always going to be up on defensives. But that doesn't mean that like, I don't think that those are better companies. I heard Stock Talk say it earlier, and he's like, the companies that are underperforming or that have underperformed for years and years are the companies that look like they're remotely doing well. But you've just had to underperform the market for years in order to get that gain. Fubo, let's not talk about that. Okay, let's bring good vibes here. Isn't it like $1.50 or something like that? It is a. Is this not a dead company? If you think that Fubo's having a good day today, zoom out. Okay, $1.60. The market is finally getting right and more rational. Bro, the fastest growing, highest margin businesses are the cheapest in terms of the PEs. Like, I know you're looking for a reaction, and I'm giving you one, but like, that's so illogical to be like, oh no, you know what? It was better whenever people were investing at Costco at a 53 PE, 53 PE, and what we need to stop investing in is Amazon. Very similar business, everything like this. 31 PE, not included their cloud business. You know, they're in the same retail space. So yeah. how else am I supposed to say it? The price to earnings. Okay, that actually brought me to, I wanted to look at another ticker though. What's ETH at? 1936. We ended up hitting 1922 a couple minutes ago. Guys, Sean Farrell was right. And then he changed his predictions. Fundstrat's own Sean Farrell said that Ethereum, we could see in first half of 2026, it dropping down to 2,000 to 1,800 was his base case. And then he said afterwards, after all the heat and everything, he said, well, you know what? That might have been an overreaction. And now we're here. That same man that called for 2,000 to 1,800 in the same report, okay? So the same clear mind that got him to that result, he also said that Ethereum would test new highs at the end of 2026. Not talking about Tom Lee. I'm talking about someone that works for one of his companies, but obviously thinking in his own right, because Tom Lee wouldn't have ever, posted that 2,000 to 1,800 report in the first place. What was his ETH bear case? I don't think he did post one. I love how I say like Sean Farrell, and then someone's like, "Do you mean Tom DeMark?" Like, no, I mean Sean Farrell. I'm certain on that name. But yeah, Tom DeMark is also DeMark Analytics are trying to help with Tom Lee's ability to purchase Ethereum. I mean, I'm slightly interested in eToro. The only thing is that like I think in these markets, it's so much more interesting to just buy the names that are like dominating. Robinhood's at 74. It's half the price that it was at its peak. Half. Cut in half. You know? I am actually curious from this bottom feeder comment here. Posted 3 lobster emojis, says we take over. I am curious if a human wrote that emoji or if an AI did. That would be interesting. Because Maltbot essentially is the, using Claude, trying to make these really useful agentic tools. But they've been able to write and post and do all this sort of stuff. But yeah. How much is Tom Lee down on? Yeah, I think their like net losses is something like 8 billion. Yeah. Maltbot is peak AI rot. Yeah, I think I tend to agree with you that it's not everything that people are making it out to be, but I think it is a big sign that those tools are right around the corner. That the real agentic tools are being built today that will be deployed over the next 12, 18 months will be extremely, extremely useful. By the way, guys, this has nothing to do with the companies that we're looking at. Well, maybe it does. Maybe. Anyway, tomorrow, we're going to have quite the video that is being posted. I'm not going to give any hints. I think what is already known about it is that I'll be talking with somebody and doing a video. And what else can I say? They're an important person of a public company that I may or may not have talked about before on this channel. And it is crazy. Crazy. I'm telling you, like the chain of command in order for me to talk with this person was probably like 4 or 5 people deep. And StreamYard, as you guys know, that there's people like that are like sitting backstage. There's going to be like people sitting backstage. Now, here's the thing. I want to say this as well. They said, like, here are some questions that we can or cannot say or whatever. They said nothing's off the table. And in fact, they said, we would like to talk about these certain things. And I couldn't believe the types of questions that they wanted to talk about. Like, I was like, wait, those are hard questions. Like, those are like really, really interesting. So, that's likely to come out tomorrow. And, yeah, it's one of those ones where it's like, dude, how did I get here? Anyway, I'm not giving any hints, anything like this. So, yeah. Oh, it def must be Mr. Beast. I don't think you realize how big Mr. Beast is. I've got a couple million subscribers to go before he even sends me a text. Bought so many dips. Matt, man, you're the freaking legend, honestly. Matt was the absolute highlight of my trip. I mean, there were a couple people. Nate was unbelievable. Amit Patel was great. Like, honestly, I'm not even giving credit to all the people that I did end up talking with. Michelle and Ray. Ray's a marathon runner. I didn't like. Also, a lot of people were asking me health questions, which I absolutely loved. So there was a lot of sauna talk. There was a lot of stuff like this, but I could not believe how good the meetups were. It was nice to meet you at the meetup. Absolutely, man. Yeah, no, it was great. Amit Patel is one of the mods. Unbelievable cool dude. But me and Matt kind of stayed up like, I don't know. There was a part where we just like sort of sat at a table with each other and just sort of talked for like just hours and hours and hours. And I was like, that honestly, I think the meetup was fun, but I think those sort of moments are also really cool where I got to hear so much about Matt's background and how he's gotten certain jobs and what that took and the way that he thinks about life and family and like those types of moments are so special, man. And I just absolutely I was trying to soak it all up. And then Danny was sitting, another person that was there was sitting there and just like, wow, he's really, or Tanner's like way too interested in the story. I was like, what do you mean? Like, it's, what do you want me to be disinterested? Like, Amit Patel is he's unbelievable. He is unbelievable. He's one of those 10x individuals in general. As we're talking about this, Hood is dying in front of my eyes. 73, 71. Also, why is my thing all messed up? There we go. Gosh, this looks like crap. I freaking hate this tool. 73, 71. Just purchase more SoFi, just purchase more Hood. I'm seeing this. Okay. I need Palantir to go back to 60. I think that might be asking a little bit. That might be asking a little bit too much. I don't know if we'll see those types of prices, man. So let's have a look. Palantir. I mean, I'd be a huge buyer if it went back to $60, which is so funny because I wasn't a buyer on the way up. But I don't think in my wildest dreams I could have ever imagined this level of execution, right? So, yeah, that brings us back to November of 2024, which means the earnings that we saw back then was Q3 of 2024. That's when we were at $60 last. To put that into perspective, if we go quarterly on, why isn't this loading? Okay, there we go. Quarterly revenue back here, and then so it's Q3 of 2024. They were doing $827 million of revenue. This is just revenue, with skyrocketing growth to 36%. And then as time has gone on, they have posted from 36% to 39 to 48 to 62 to 70% growth. That's unreal. Well, margins improved, well, net dollar retention improved, well, employee count practically stayed the same. Like, unreal. So it would be hard to get back to 60, but I would take it. He was talking about Hood to 60s, not Palantir. How did I get Palantir then? How did I even think of that? Hood is for sure going to 67. Yeah, I mean, well, from this price right now, I don't think that's that even that crazy of a bold suggestion, but the fact that we've gone from 150 down to potentially 67, I think, is the more absolute insane call. This is the thing. This is the Sean Farrell, Tom DeMark thing. Amit Patel, or do you mean Amit Kukreja? Which one do you think I meant? Of course, I meant Amit Patel. I said it. He's a mod. Amit's great, but I've met Amit probably like 8 times. Now it's just like seeing one of the boys. So I love Amit, but that would just be some form of racism if I just called him Amit Patel. That's just ridiculous. Do you mean Chris Patel? Yeah. Let's see. Wait, not the same guy, different guy. Yeah. 2 vastly different people. Different last names, different people. From the Amit meetup, I think you, Tanner, was my favorite person to be on. Okay, that's way too much glaze. I appreciate it. But for real, none of that is going to do well for my ego. Okay? I would have appreciated you saying that, like, I had bad breath, but, like, you kept distance. So it was like something along there where, like, you could still put me back in my place. Yeah. Show the picture where you're standing like a soldier in Amit's living room. I have it actually. Michelle sent it to me after you said that in Amit's chat. Or no, that was with Steve, right? It was this one. Here, let me make sure the brightness is good. Yeah. Why am I standing like that, bro? Anyway, it was a lot of fun. His apartment was very, very nice. The view is insane. Okay. Let's go ahead and The VIX is up another 14%. Jeez. 41% in the last month on the volatility index. Cirrus Logic up 3, Coca-Cola up 3, Uber up 3, which I actually think it probably should be up even a little bit more. They ended up posting fantastic earnings. Everyone just sold them off like crazy. Yeah. I had best man vibes 100%. I don't know why I'm standing like that, dude. Best man vibes is the funniest way to put that. Okay. Kind of looks like I absolutely not. The food was great. Yeah. Yeah. gotta hide the boys. Tanner seemed interested to meet people. Like he really, dude, I did. How can you not care? People are literally coming to see you. Like it's incredible. It was like a complete imposter syndrome, and I'm just realizing that, like, you know, this is gonna be potentially a moment in time or something like this, and I just absolutely cannot take this for granted that people want to come and hear my opinion or something along these lines. So I absolutely wanted to know everyone's name. And if we did take a picture together, please DM them to me because I'm saving them all. Like, I mean, this is it's a period of my life that I want to remember forever. Okay. Let's see what else. Silver 68. ETH 1950. I hate that one. Like, why isn't this doing this? Is there not is there a button that I accidentally clicked that's like making it not adjust? I mean, like, let me close it and reopen it real quick. Sometimes it works and sometimes it doesn't. And then it just ends up zooming in and then the aspect is all off on all the names I'm looking at. Okay. Am I going to future meetups? Perfect, Ethan. Thanks. But am I going to future meetups? Likely I am. I'm not much of a traveler and it kills me every time. So I'm definitely going to be hosting one in Toronto, and that one I will be at. Okay. When do we get the 200 handle on NVIDIA? Man, after Google's earnings and what we're about to see from Amazon, I mean, we should get it tomorrow, but we won't. So, yeah. We won't get it right now. I think we'll need a broader market return in order to see NVIDIA hit sort of a 200 handle, but still. 173. Let's see what is in the news, if anything is coming in right now, because I have not checked it in a little minute. Okay. The entire software sector is having its Uber moment. The world is convinced a disruptor will replace them. They're all convinced it will instead, they're all convinced it will instead fuel them. Agents in this case, AVs in Uber's case. Yeah. It's a good way to phrase it. Elon just confirmed that SpaceX is not going to be making a phone and that Reuters is lying. Okay. Am I following Intuit in these names? Intuit, what are they at? Over the last 3 months or so, down 33%. 31% in the last month. Shopify, I think, is having a slight recovery, if I'm not mistaken. Yeah, I mean, slight is a easy use of that word. App Lovin down 41% in the last month. What am I buying today? I mean, honestly, I haven't like I'm looking to potentially add on to SoFi, Hood, Nebius, these sort of names, but finding cash is like Kelly. I'm going to use that $5. Like man, but like, what's the alternative? I sell names that I feel extremely confident in. I have a few weeds in my portfolio. BMNR might be a weed, something like this, like where, it's so sentiment driven and I can't take a step back and just say, hey, you know what? I can rest knowing that earnings are still growing and they're taking market share and that TAM is growing and the world economy continues to grow. So I don't have to worry about those, but like holding on to like Mercado Libre, Amazon, Nubank, Hood, SoFi, Nvidia, Shopify, like these companies are getting destroyed, but they're growing. And so, like, I'm not a TA guy. I'm not trying to do anything like this. I'm just focusing fundamentally on these businesses' performance. Speaking of TA, Jason, what's going on, brother? How much longer does this go on for, man? I'm getting tired now. It's 3 days in a row where I've had like people saying, help us, save us. There's nothing I can do. Bro, I don't know. Okay, see, we're all lost. Okay, 300K down in a week. I know it's like, it's nuts the numbers that people are down right now. He does bully us, Jason. Do not even say that. Don't embarrass me in front of Jason. Everyone on their best behavior. Okay. Honestly, I thought about this. Claude Opus 4.6 is out. More panic? I mean, who's to think that this, like, the only thing I am a little bit worried about is every time that these models end up getting large upgrades, who's to say that we don't continue to see this pain every model upgrade? We're like year 3 of ChatGPT. Every time that they solve a new use case, is this going to continue to bleed into Shopify's business? And like, I mean, it's definitely possible. So do we just go into fixed income and dividend names and just say, hey, you know what, we need to step away from some of the quote unquote growth names? Bitcoin has now officially raised all of its gains since President Trump was elected on November 5th, 2024. Bitcoin's now down 6% since the Trump election. Bitcoin. And yesterday someone said, are we in a crypto winter? I think it's safe to say we're in the thick of it, ladies and gentlemen. Microsoft is the one to buy right now. I like Microsoft. I definitely have Microsoft here. Tanner, you met a good friend of mine from Memphis who moved to New York named Pervin Patel. He said you're a super cool dude. I agree with him. Thanks, brother. I appreciate that. That's awesome. Y'all are glazing me way too much, though. For real. Call me Tantrum Tanner or that I have a dent in my head. Let's not forget I have a dent in my head, ladies and gentlemen. Tanner, what do you think about Reddit earnings? Honestly, I'm super excited. I think the the ads platforms have done extremely well. Google just showed up, dominated their ads platforms. Meta just dominated. Snapchat is not, I wouldn't even call that just stop putting that in the list. Reddit is sort of dropping on some concerns that analysts have essentially said that, they're getting beat up on channel checks that agencies are not using Reddit as much. Well, my sort of reply to that is that whenever you take a look at the surprise beats on revenue and EPS for Reddit, they've never, ever been accurate on this name. Half by 10. Is this gravy salad? Gravy salad. Dude, you made me frickin' popular on X, man. I told you I'd do it to you, but I completely stole your quote. This is Gravy Salad's quote. I mean, sorry, this is my quote. This sell-off in software stocks feels a lot like Search is Dead 2.0. Look at that, 53,000 likes. Someone said you quoted Gravy Salad. I was like, who? What? Never heard of a weird name like that in my life. Anyway, onward and upward for me. Okay. Okay. I forgive you, boss. Thanks, brother. You always have a spot in this community with quotes like that. Because honestly, I think that's exactly what is happening. Nebius price is getting ridiculous. What are we at? Please tell me we don't have like a... Okay, yeah. No, that's a good price. 76.56. When did they show off earnings? Isn't it like November 12th or something like this? Nebus. In 7 days. No, yeah. Did I say November? Sorry, I meant to say February 12th. It is February 12th. At 5 a.m. Okay. I was really excited to listen to that call. Google's pumping now. Hey. Not bad, not bad. Jixer boy. G6R boy. I think it's Jixer boy. Thank you, brother. Cheers. Don't feel a need at all, by the way, for these memberships. We're good. I was joking. Well, I wasn't joking on the fact that I don't have cash, but you guys need to buy the dips as well. Okay, let's see. Microsoft, man. I cannot believe this is below, like they're below a $3 trillion market cap, man. Like, are we like, now I get it. Like comparatively, I guess you could say they would even sell off even more after you see Google's cloud revenue growth so much. You'd kind of be a little bit like, why was Microsoft's even remotely a miss, considering that Google's beat by, like, they didn't beat by 9%. They beat by 9% growth. Like, so what was that? A beat by like 30%? Like, it's insane. Can I borrow some cash? I don't have cash to give you. Google Cloud Platform took share for sure. Definitely. Now we need to see what happens. Hold on a sec. Okay. Now we need to see what happens on tonight's call, AWS. To tell anyone to buy the dips after saying you are out of money is absurd and simply horrible guidance. Well, I'm not suggesting anyone don't follow what I have to say. What I'm saying is that I really like these companies. I like them at their previous guidance. I'm not an arbiter of price, so if you guys are coming here for, hey, when does Microsoft bottom tick? I promise you I'm going to give you the wrong advice. I think that it is pretty sound advice to say, hey, you like good companies, you probably should own those companies. And if you can own these companies at better dips than you could previously, then great. I'm not a trader. I'm not, people say, hey, we have a lot lower to go here. So I'm going to sell Microsoft at 400 because I think I can re-enter at 340. And that's going to give me, a better cost basis, more shares, stuff like this. You go ahead and try that. That's not me. I like to look at companies fundamentally and qualitatively. And what I see are strong businesses. Now, the comments don't bother me, but I actually do think that they're good. They're good lessons. I think maybe a bunch of people are having those questions as to why I'm potentially saying that, like, I would buy this here, but yet I'm not buying it here because I don't have cash. Because the valuation's better than where I was buying it, yesterday or something like this. I like Reddit here. I'm not anti Reddit. But there's other names that I know very well. There's definitely gray spots of Reddit's entire thesis that I just don't fully understand. Yet I do feel like I fully understand names like Robinhood, SoFi, even Meta. What I love about Meta here, and the fact that I like the sell off a lot. Well, even though they're up 1.5%, but let's go back a little bit. 5 days. I have to be really selective. No, but they did end up selling off from 800 down to 680. Is like, what do we think? Opus 4.6 is going to create a new social media platform? What are we talking about? If you had cash now, what are you most likely to buy, Nebius or SoFi? So I think that the upside on Nebius is much more exciting than SoFi. Of course, like one company's growing at 30+% rates, the other company's trying to grow at 400+% rates. There's a big difference there. But for me, I like to balance sector-based as well. So I don't want to just pour everything into artificial intelligence, and I don't just want to pour everything into financials. I want to get Nebius to 5% of my portfolio and SoFi to about 15%, and I'm not there on either one of them. So I would I don't know. It's hard. I think maybe at these prices, I might even go 50-50. I don't care for Iran, to be honest. I don't like Iran. The reason why I choose Nebius over Iran is the exact, I think reasons that the market is seeing. Like their cluster max rankings are like the golden standard of who has the best data centers out there. Iran is not in platinum tier, they're not in gold tier, they're not in silver tier, they're not in bronze tier. They are in not recommended and underperform. That's scary as ever. They're placed there because they don't have the best chips, and they're also placed there because of ways that they end up writing contracts where they could potentially charge people while they're setting up clusters, which is just bad business practice. I just don't like what I see from Iran. That said, I don't know as much of it. I don't know it nearly as well as I know Nebius, but like the signs that I've seen so far, like the margins on their Microsoft deal and everything, I just didn't even like. So I just have no reason to look into it further. Nebius, everything I look at, I like. Um, Nebius, SoFi, and Nvidia are 20% each in my portfolio. I mean, come on, that's sick. What's the other 40%? Tell me cash, and I'll quit my job, and I'll come work for you right now. If you show me a check that says you have 40% cash in your portfolio, I'll quit my job right now. I'll come work for you. I'm going to cover Fortinet earnings today. I will we'll be looking at the numbers, but we're not going to be listening to the earnings call. So I'll be doing my earnings with Amit and Jose and Neil and all them. We are obviously going to be listening to or looking at the numbers for Affirm, Bloom, Fortinet, Roblox, MicroStrategy. Like today is a big day. Like I like every company that's reporting today. Reddit, Iren, but we're going to be listening to Amazon. Does margin count as cash? Less. I'm retired, but I have 85% cash. Well, careful on your time horizon, right? Like I hopefully my risk tolerance and your risk tolerance are different. So I don't think that you should be looking to go pour a bunch of money into Nebius or Bloom Energy on some large dip. If you are retired now, Okay. What time will you start your Amazon earnings stream? 3:45 p.m. Eastern Standard Time. I want to see why Tom Lee is in the MicroStrategy call. Is he? Is he scheduled to be on the earnings call? I didn't hear anything about that. Oh, by the way, Google across the board, even though they are, selling off a little bit, they are starting to run, which is nice. Oh, you guys can see I was looking to share my screen here. They are starting to run, which is nice. Doesn't mean that it's going to hold out that way, but essentially across the board, we ended up seeing upgrades. Now people, I was showing off this tweet the other day of one of these guys. Now they maintained a price target of $346. That's not the point that I was trying to get across. What I was trying to get across is that they did this upgrade or this buy rating, even though it was so small comparatively to where the stock was before the earnings call was done, before Q&A had even started. I just hate that aspect of Wall Street. I hate that they just we know what we're talking about, even though there's 1,000 unanswered questions. And Sundar ended up adding so much additional color during the call that you could not have seen in the numbers, yet they feel confident to give price targets to their many customers. Who's paying these guys? Iran has 3 gigawatts of secured power. 1 gigawatt costs $50 billion. Yeah, I know, but that's another thing that I do not like. I like the fact that Nebius is actually fully sold out. Not the company that has a ton of inventory. Why does no one care? That actually scares the crap out of me. And it could be a beast. I'm not making but the cluster max ranking, you could say what you want about it, but that's not my opinion. That's the golden standard for data centers, and they are not a great look. By the way, Nebius on that ranking, gold. Second highest tier. The only one above it is the other way around. By the way, Nebius also owns. You're more thinking CoreWeave, but CoreWeave went more the rent side. Now they're doing a lot of buying their own data centers as well. How are you feeling about Shopify? Well, it feels like I got kicked in the nuts a couple times, but I do still love her, but she's abusing me. Do I call a therapist? Do I call a relationship counselor? Or do I just buy the dip? And right now, well, I haven't even bought the dip yet, but I still love her. But yeah, Shopify's hard to hold. Well, not hard to hold, but it's just I'm losing a fortune. Yeah, the ClickHouse stake, Toloka, AV ride. There's so much in Nebius to love. Why not buy CoreWeave as well as Nebius? I mean, it like I've definitely thought about it. It's just more, does it hurt me to buy Nebius? They're growing much faster. The valuation looks better. But I do like CoreWeave as well. But it actually seems like more of a safer play than Nebius. Nebius seems a little bit more risk on. And during these dip buying moments, I don't mind buying into a name that I know. Does Google turn green? Does Google turn green here? Is this just a Google thing, or are we seeing this in the Qs? A little bit we're seeing this in the Qs. Still down 0.7, but I think the SPY probably down like, wow. Guys, the SPY is down more than the triple Qs. Oh, it's broadening out. It's broadening out. Tanner, where can I see your original thesis? When I'm not a long-term, or sorry, I'm a long-term holder of Nebius, but I have not been holding it for very long. It's actually it's definitely below my average price right now. So I think the lowest purchase I've ever seen is 75.80, something like that, which is probably where we're at right now. Yeah, $76. And I think my average is something like 85 because I was continuing to add all the way into the 90s. Anything below 100 right now just seems like a buy for me on Nebius. But like, I don't have some original thesis of like, hey, you know what? I love Nebius back at $20. I was not as fortunate. When are you looking to add more? Literally as soon as possible, as soon as I get some cash. But I don't know, man. I don't know. There might be really strong names. I've also thought like, if Google continues to run, like, do you potentially sell these extremely strong names into other names that are strong, but sentiment's worse on them? I don't feel comfortable doing that, but it's definitely crossed my mind. The weeds that I did have in my portfolio, and Shark Ninja wasn't a weed, but like I didn't see the upside in it nearly as much as I do for big tech. So I got rid of Shark Ninja. Airbnb, I was in for a while. Rotated out of those names. And yeah. There's not much left in my portfolio that I consider like I need to trim the fat or something. I think I got a nice lean 6% cut portfolio. Okay. That was a little bit of pause. I know. I was getting a little bit worked up there. No, I mean, we'll be fine. AMD is super interesting. I cannot believe this is selling off so much. We're 192. Okay. Covering MicroStrat or strategy earnings. I wish they changed the ticker. It would help me realize the name change. But we'll be covering the numbers, not listening to the call. Unless it falls. Yeah, no, probably not. Where do you guys think Hood will bottom? Someone called for $67. I have a meeting today as well, so I have to go here soon, probably in the next 5 minutes or so. Here's some cash to buy a share of SoFi. Thank you. Hall is from Hollywood. Thank you so much. I absolutely will do that. Let me buy a share of SoFi. Okay. There you go. I got enough cash to buy a share for sure. I've got enough cash to buy SoFi always. You can never run out of cash whenever you're buying stocks that you love. No, I just mean I don't have thousands of dollars right now. I'm Canadian, so I can't use Robinhood, but yeah. Tanner looks like the type of guy to call the HOA on his neighbor. Now we're getting back into the bullying. Okay. So as I wrap, guys, and I'm going to say this whenever I'm on my call with Mitt as well. Get ready for tomorrow. The interview. Okay, I just gave away that it's an interview. The interview that's coming out tomorrow, extremely, extremely exciting. Very cool. But I like a little bit of surprise, so I'm not going to say. However, they did actually message us and they gave us the green light to say that we could give it away, but I'm not gonna. It's Noto, it's Vlad, it's Josh Brown, it's Elon, it's Michael Saylor, it's Yoni. Yeah, the eToro guy's Yoni. I'm not going to say who it is. You guys aren't going to get any hints out of me. But I think a lot of you guys are going to like it. Okay. Benjamin Netanyahu. It'd be quite the shift in the coverage that we have on this on this channel if I get Benjamin Netanyahu on tomorrow. Your mom? That would be another shocking one. Yeah. By the way, she's dead. So converting her back from the ash to appear on the stream. Alex, Chris, that one would be a little bit too soon. Jeffrey Epstein would be hard to get as well. Hassan Piker, Joe Rogan, Tom Lee, Obama. My mom, yeah, your mom, yeah, for sure. It'll be a lot of fun. I think all of you guys will know who it is. Anyway, until tomorrow. Well, actually, until Amazon earnings. I'll see you then. But yeah. Bye for now.